simple formula here. Revenue minus expenses equals profit. So hypothetically, we should always be looking to increase our revenue, decrease our expenses, and therefore increase our profit. So in our industry, what we see is 99% of insurance producers only focus on the reduction of expenses. And a majority of these are only looking at one line item, and that's reducing premiums. So oftentimes when you get new business advisor calls, this is the pitch: let me save you money. And while that's good in some instances, we actually saw a recent example with one of our specialty teams in which a holistic approach, looking at increase of revenues, decrease of expenses, and increase of profits, helped them attain business by bettering a client's specific situation. So let's walk through that briefly. This team had a conversation with a prospective client and asked them what's one of the pains in their insurance program. And the client stated that one of the biggest frustrations is they just had a prospective customer of theirs that they couldn't perform or bid work for because they were out of compliance. They said it's just frustrating, it was an insurance dynamic, but we're out of compliance and therefore we couldn't attain or win this business. So our team looked at it and went to the drawing board and said, what would it take to get in compliance based on those requirements, and is there a likelihood that they would attain the business should compliance be in place? So they had a discussion. What they found is that the cost to be in compliance would be $250,000 of additional premium. So that's a big number. In most insurance professionals' cases, they're never going to try and pitch this because that's not the traditional dialogue. So 10 million of revenue, 250 of additional expense, but what this meant is that this prospective client was able to attain that $10 million contract being in compliance. So if you just look at basic math, 10 million times 15%, let's just use that as an approximate conservative margin, equals 1.5 million. And then we have our increased expense of 250 that we subtract. And what this meant to this, at the time, prospective client, but now new client, is an additional 1.25 million of increased profitability. So that's where in our industry, even though this is an important line item, it's important to look holistically at the whole picture to make sure that we're increasing the profitability of our clients to our fullest extent. One of the differentiating factors that you should be looking for when you're selecting who your provider is. Thanks for listening.